Right, morning and welcome everyone to this somewhat belated discussion. We apologise for that with some technical issues with Finder Energy Holdings, who works under the ASX ticker FDR. My name is Matt Warner, a partner at Vector Advisors, and we work alongside the Finder team to assist with the company's investor relations and communication. I'm joined here this morning by Managing Director Damon Neves and Chief Operating Officer Mark Robertson. Welcome, chaps. Damon may be well known to many of you joining us today, but for those of you who don't know, Mark is the project leader on Finder's Kuda Tasi and Jahal development project. For some quick background, in August last year, Finder acquired a 76% interest and operatorship of PSC 1911, which is located offshore Timor-Leste. The remaining 24% is held by the National Oil Company of Timor-Leste. The PSC hosts a number of opportunities across the oil and gas spectrum, that being exploration, appraisal and development. Of significance for today's discussion are the Kuda Tasi and Jahal discoveries, which host a combined 22 million barrels of 2C contingent resource, and which Finder is actively moving into development and production, and most importantly for all of you out there, cash flow. In terms of running the webinar today, in the first part we'll jump into the recent production modelling work which was announced to the ASX last week and get an update on the status of the development project. The second part we will open up for questions from investors, which will be coordinated through the webinar host facility, and I can see some of you have already posted some questions, so thank you for that. So let's jump into it, shall we? Mark, let's perhaps begin with you. You joined Finder last year and have an important role in running the development project. Perhaps you can give us a little bit of information on your background and work history.
Thanks, Matt. Well, I started my career in 1986, initially working in the North Sea as a construction technician, before moving on to drilling with Shell in northern fields in the UK. After that, I got the opportunity to work on my first FPSO project, which has led me to work on lots of FPSO developments throughout Asia Pacific and the UK. And during that period, of course, I got the opportunity to work for Maersk, Apache, Jadestone. I also worked for Carnarvon Energy and now Finder Energy.
Fantastic. So there's some great companies and experience there, and as all good development managers I've ever met are Scotsmen, so that gives me a lot of good faith there. So with all that experience under your belt, Mark, what made you join Finder last year?
Initially, I started working as a contractor with Finder last year, working on the due diligence for the opportunity, and during that period, the more I learned about it, the more I became involved with it, the more I wanted to be part of this. It's a great project, and of course I got the opportunity to join the company last year and take this role, and I'm looking forward to it.
Fantastic. Okay, Damon, we might just turn to you now. You released an announcement last week on the results of the recent reservoir modelling for the Kuda Tasi and Jahal development. Seems to have been well received by the market, and I think there seems to be a growing appreciation for the company and the value potential of the project. Can you talk us through that modelling a little bit and the results, and what does it mean for your level of confidence in what you're doing and in those forecasts that you put into the market?
Sure, thanks Matty. So we did receive a lot of interest off the back of the reservoir modelling results that we released. I think for many people, the penny dropped in terms of the potential scale of this project. If we have a look on screen now at the results of some of that production modelling, you can see the daily production rates shaded in green and the cumulative production in the green line. So in the first year, we have a plateau initial rate. That's based on facility constraints, the liquids handling capability of the FPSO. That's an assumed rate at this stage. And then you can see a normal steep decline as the fields start producing and the reservoir pressure starts to drop off. Now that's that's not a bad thing here. What it means is we produce a lot of our reserves very quickly. So in fact, in the first 18 months, we're forecast to produce around 10 million barrels. And that's a lot of oil. And currently Brent's trading at around US $75 a barrel. So that represents of the order of US 750 million in sales revenue. And that's just the base case, the 3-well development case for Kuda Tasi and Jahal. If we're successful in tying back the Lanjara prospect, you can see that curve in the blue. And the impact that has on the cumulative production, that's the blue dashed line. It takes a big step up and goes off the chart there. So that's a very high impact outcome. Lanjara risking is likely to come in around 50% chance of success. So that's something that the team is very motivated to go after. Matty also asked about a level of confidence in this data. So the work has been done by an independent consultant, Tyke Petroleum, by a chap named Mark Podson. Now, Mark's a very experienced reservoir engineer, over 30 years of experience. His credentials were contained or mentioned in the release. But really, our confidence stems from the data. We have a lot of data on these reservoirs. So just in Kuda Tasi and Jahal alone, we have 5 well penetrations, logs, and core data. And that and flow tests, and that fully de-risks the reservoirs from a technical point of view. So we have a lot of confidence around.
And what are those flow tests? There was some pretty significant numbers in those flow tests. What can you tell us?
Yeah, so the flow tests are demonstrating flow rates of around or above 20,000 barrels of oil per day per well. So this laminaria formation we can see from the nearby analogue fields that produce from the same reservoir. It's very high quality reservoir, and that translates to this high deliverability.
Fantastic. All right. Well, clearly, I think we can all acknowledge there's a great opportunity there, and there's a lot of promise. But I think what investors on the call today, and more broadly, what they want to know is how do we get to that point where that potential is reached, and where Finder achieves that forecast production, and most importantly, gets that cash flow start coming in the door.
Sure. Look, I think we're fortunate to step into a project that's been fully de-risked. So the risk capital on exploration and appraisal is behind us. So we're really now focused on the development phase. And as we see it, there's 2 main stages. The first is funding, and the second is the build out. So the engineering, the procurement, and the installation of the facilities. And we're attacking all of those work streams in parallel, and our mindset is around how quickly can we produce that first barrel of oil.
Sure. So just on the funding piece then, what's the update on that process? Obviously super important. And Mark, I think it might be useful if you can give us a bit of an update on how the development activities are tracking, and where to from here would be terrific.
Okay, so the way we're seeing funding is we think what you'll see is big pieces of the project fall into place. So we're currently engaged on the FPSO, the rig, drilling management services, contractors, your materials and the like. And we're looking to do creative deals around all of those arrangements, which would see that expenditure come out of the capex bucket and into as far as possible into post-production cash flow. So that will help reduce the capex funding we require, and then that final piece of funding is likely to come either from an industry partner through a conventional sort of farm out deal for a promoted share of the capex funding, or financing. And that financing can take a number of forms. So we're looking at offtake prepayments, we're looking at conventional RBL, Reserves Bank lending, Nordic bonds, and a range of other possible solutions there.
Yeah, and you guys, the history of the company, not too bad at the old farm out game. So I think there's probably a high level of confidence you can get something done there.
Look, we've done a lot of farm outs. I guess as much more than anyone perhaps in Australia. Hundreds of millions of farm out deals. They've been largely in the exploration context. So those industry groups, there's a lot of overlap with the groups we're talking about on the farm out or farm into Kuda Tasi and Jahal. But there's a whole range of other groups that we're talking to here on the project financing side. Private equity banks, and I think that there's a much broader universe of groups that are interested in funding development assets that are close to production.
Can imagine, especially with those that production profile and oil being at a pretty good price at the moment. So, Mark, what can you tell us about where the project's at and the work that you're doing?
Yeah. Well, we're in the concept select phase for the development. There are 3 distinct work streams in that. We have the FPSO, we have the drilling, and of course we have the subsea, which includes flow lines, umbilicals, and risers. That work is continuing. We completed a global market review for a target FPSO, and we've identified several FPSOs that are suitable for this development. And we're now, in discussions with the owners so that we can facilitate further engineering that will support the development of the project. Again, we are also working on the other streams, drilling and subsea, and trying to identify long leads that will facilitate the earliest opportunity for production. And again, those discussions are continuing and we're working on all fronts.
And with some of those long leads, I mean, a bit of a slowdown in the oil patch, I suppose, over the last few years. Is that you're sort of seeing a bit more kit available and things potentially to bring things forward?
Yeah, I think, there's several opportunities that we do see. I think there are parts of the world where projects aren't going ahead and that's given us an opportunity.
Yeah, great. Okay. So, look, it sounds like there's a good amount of progress. There's a lot of balls in the air, but things are moving forward. What then can our investors out there today look forward to in terms of milestones and upcoming catalysts that's going to drive that share price and give them some reasons to dive in and buy the stock ASAP?
Sure. Look, 2025 is the year for us to make this project happen. In terms of project milestones and the timelines there, we've obviously got a lot happening and we'll be giving regular updates to market on those activities. I think the big news flows that we'll see will be around the key pieces of the development. So securing an FPSO, a rig and the like, and the commercial terms around that, which will have a big impact on CapEx and ultimately the final piece of funding and how much of the project we'll have to give up to secure that. So anticipating the questions we're going to get, we are working full steam on the FPSO and the rig and the drilling management and materials and the subsurface. And I would hope to see in the coming months, some of those discussions come to a conclusion which will lock in big pieces of the development project.
Fantastic. Okay, thanks. I think we've got a short time left to invite some questions, and there's certainly been some coming through. I also gather I'm a little bit hard to hear out there, so apologies for that, because my questions, of course, were definitely worth listening to, but we'll work through that. So we'll just sort of leap into the questions. We've got one which I think is a good one. What's the nature of payments to Timor-Leste in terms of royalties and other things once the production gets into full swing?
Okay, so it's a PSC or a production sharing contract regime. So it's a bit different from the royalty tax regime we have in Australia. So we pay off the top, we pay a 5% royalty on gross sales revenue to the regulator, the government. And then there's a cost recovery mechanism in the PSC where we recover historical costs. All the historical expenditure in the permit, we recover first before there's then a profit split with the government. We pay corporate income tax in the normal way. The tax rate in Timor-Leste is 30%. We have some carry forward tax losses that we acquired as part of the transaction, but basically we pay our dues through a 30% income tax on our profits and the 5% royalty.
Yeah, very good. Obviously, being a small cap company, funding, cash position, everything is always a consideration at front of mind for management and shareholders as well. What's your current sort of cash rate? Cash position, where does that get you to in terms of the work you're doing? And I guess people are wanting to know, are you going to need to raise any money, and what's the position around that?
Sure. Look, we have about 7 million in the tin. That sees us through all of our planned expenditure through, for the most part, through to the field development plan phase. Our plan is to transact this year, which would see us recover costs and carry on future expenditure. So, there's no plans currently under consideration to raise capital. We did do through a rights issue. We did raise a small amount last year to fund the acquisition and this phase of the work program, and that's sort of kept us whole from a cost point of view. The other parts of our portfolio, the UK and Australia, are largely self-sustaining. As our audience is aware, it's an operated joint venture model, and our partners make contributions to meet those costs.
Yeah, very good. Couple of questions on a similar theme as well. There was an MST research report that came out in the last week or so. It was an update to an original piece of research done by Stuart Baker. I think the price target at the moment is set at 36 cents off the top of my head. There's some timing considerations in there around where Stu thought you would get to in terms of your partner process and so on. Quite punchy assumptions perhaps, but what can you you've sort of alluded to it, and I know you're working hard on it, but maybe it might be worth just clarifying where you see timing on those issues.
Yeah, happy to. Look, a very good piece of research that's been put out by MST Access. We're very grateful for their coverage and the good work they've done. Look, in terms of timing of the partner discussions, as I say, what we're prioritising is the commercial arrangements around securing the vessel, the FPSO, and the rig, and other, I guess, key pieces of project infrastructure. That's what we're focused on, in the current quarter, and we hope to see some results there in the coming months. That will then define what our sort of capital requirements are for the discussions we're having with partners. Now, we opened a data room for the industry partners in January. So those groups are evaluating, doing the due diligence. So we're entering into sort of commercial discussions around that, but with a bit of uncertainty around what those deal metrics will look like. So I think that's necessarily going to follow the work we're doing or prioritising now on the project infrastructure.
Fantastic. All right. And then I guess we've seen in recent times some small companies look to sort of progress these sort of offshore developments and find life tough. What makes this deal a little bit different, or the project that you've got a little bit different, and why do you see yourselves being able to really forge ahead with this and make it a winner?
Yeah, look, I think that's a great question. I think certainly the way I see it, it's the strength of this project. I think you've seen what this reservoir can produce in terms of daily production rates and the field performance, which translates to very strong project cash flows. I'd say it's a relatively small field, which makes it affordable, but the economics are very attractive. And I think for that reason, we'll see a lot of interest, we are seeing a lot of interest in the project from both potential industry partners, financiers, as well as the key contractors around vessels, rigs, subsea, etc.
Yeah, okay. And then there was an update in the market a week or so ago, or a couple of weeks ago, I think, around just the seismic repro project you guys are working on. It was about 70% complete, I think, from memory. Has that moved forward from now, and how do you see that sort of helping you with this project?
Yeah, look, you can't underestimate how important that work is. It's on track, it's on budget. We'll complete that work in April. It's currently, as you say, around 70% complete. But what that work does for us, I showed earlier, the impact of Lanjara on the value of the project, the produced recovered reserves. That work is de-risking not just Lanjara, but other near-field exploration prospects, which can double the value of this project. So it's very important from that point of view. Look, it's also important in terms of mapping the faulting within Kuda Tasi and Jahal, which allows us to more precisely place the wells, so we optimise the well performance and the reserves we recover there. So look, with modern seismic technologies, we can get a lot more out of the legacy data that was acquired around sort of 2005. With supercomputers and the high-end processing flows we can do now, we can just see with far greater detail the reservoir.
Look, I think that's probably where we're at today for the questions. Thank you, everyone, for joining us, and thanks Damon and Mark for joining in as well and giving this overview. A lot of work ahead for the guys here, but some really exciting work, I think, and a lot for shareholders to look forward to. So thank you once again for participating today. We very much appreciate you jumping on board. Please keep watching Finder, and we'll look forward to many good updates from the company as the year moves along. Thanks very much, fellas.
Thank you.
Thank you.